In this video, I will be looking at trading strategies for Bitcoin US dollar that are better than buy the dip and much better than buy and hold. I will be looking at momentum style entries. I will be looking at 3 different technical indicators. I will be showing you all of my backtested results, and I will be showing you how you can do this yourself. So stay tuned. I first tested Bitcoin back in 2018, and there is a link on the screen if you'd like to check out that video. What I said then is exactly the same as what I think now, that this is a market for trend following, looking at breakout strategies, and you're looking at trading in the direction of the dominant trend. But I have expanded my analysis in this video. I'm not only just looking at Donchian price channels, but also the rate of change indicator and the RSI. And I'm going to show you how you can use these indicators to trade and maybe even get better trade entries. On the screen, you can see the backtest model that I've used for my analysis here. This is a trade-informed Excel backtest model that you can use to backtest all of your trading strategies, whether crypto, stocks, forex, or any market you are interested in. You can test on different time frames, and it is easy to add new technical indicators and test different strategies. If you'd like more information about how you can backtest with a trade-informed backtest model, there is a link on the screen and below this video. I have looked at 3 different technical indicators in this analysis, and they all tell a similar story, which is good. First of all, rate of change. Now, the rate of change indicator is also known as the momentum indicator, and it identifies the current price relative to a previous price. So you can see here, I'm looking at the 50 period rate of change, and I am calculating this as a percentage. I'm also using RSI, Relative Strength Index, hugely popular momentum style oscillator. Initial settings here are the 14 periods. I'm also using what I've identified here as Breakout. Now, Breakout is using Donchian price channels, and it is when we have a closing price that is greater than the price channel. If you would like to know how to calculate Donchian price channels in Excel, there is a link on the screen to a recent video that I have done explaining how to do this. I am testing Bitcoin in US dollars since 2014, and so we've got about 8 years worth of data in here. Testing on the daily time frame, testing using the ATR based position sizes, and I will change this to percentage, and I will show you what a difference that makes. The reason I'm using the ATR to begin with is because it adjusts for volatility, and Bitcoin and cryptos in general are highly volatile. So we have an adjustment for that. Let's have a look at some of these technical indicators and understand the strategy behind them. Now, there is a strong similarity between all of these indicators and the results we are getting. Now, first of all, rate of change, also known as the momentum indicator, measures current price relative to a previous price. So ROC 40 would be the current price relative to the price 40 bars ago. And I can change this, and you can see the results update in real time. Now, the entry level, I've just adjusted that. The entry level, the price needs to cross above this level. So 0% would be the 0 line, and we can push this higher. Typically, we're going to get fewer trades, but we are going to expect a higher average trade expectancy. So suggesting we're getting higher quality trades, but not as many. RSI, very common momentum style oscillator. Again, we're looking for this to be strengthening. So I've got the entry level behind. We're looking for the RSI to cross above the 50 line. So I can adjust this 8, 9. We can adjust this, and we can see again the results adjust in real time here. And we can also adjust the entry level and see the results as well. You see, once again, when I move the entry level higher, we are getting a much higher trade expectancy, but much fewer trades. So breakout. Now this is the original strategy that I identified years ago for Bitcoin, and it works in a similar way. Slightly different entry points, but here we've got a 20 bar breakout. When I mean breakout, what I'm talking about is Donchian price channels. So identifying the high and the low of a set number of bars. And if you want to learn how to calculate this in Excel, I've recorded a recent video on this. There's a link on the screen and you can check this out. So breakout of 20 would mean that we have a closing price that is higher than the highs of the previous 20 bars. If we're looking at short trades, it would have obviously be lower than the previous 20 lows. Once again, I can change this and see the results adjust in real time. Optimizer here, and we can have a look. So let's have a look at the breakout that I was just showing a moment ago. Let's look at all the values between 10 and 80 with a step of 5. And when I click onto the optimizer, we not only get the values calculated quickly in terms of net profit, profit factor, MAR ratio, which is annual growth rate divided by maximum drawdown, gives us a measure of how smooth the strategy is, and the percentage of winning trades. Nicely coloured in greens, we have a few areas of stability, 20, 25, and 50 and 55. But on the whole, we are getting very consistent results for a simple, easy to understand, easy to follow strategy. Rate of change, RSI, is giving us slightly different entry levels, but what it is showing me consistently is that Bitcoin and the other crypto markets are momentum style market. Buying the dip, as people have done throughout 2022, has been a risky way to trade these markets, whereas momentum has performed well. So all these results are on long only. However, we can add in short trades, and there is very good reasons to do that. Obviously, we don't know what's going to happen in the future. So looking at short trades. All I'm going to do is check this box here. You can see, first of all, for breakout, we've actually got a slightly smoother set of results, and we've got more trades as well, which is understandable because we're adding in short trades. So let's just re-optimize and look at how the results perform, whether they are similar to the previous values. And we can see straight away very quickly that indeed they are very similar to the previous results. We're getting 2 zones of stability around here, but pretty decent results throughout. So what I want to see, if I'm trading a short strategy, I want a nice high MAR ratio. Going back to the results. Now, did rate of change perform as well? We can see a decent result there. Let's have a look. So we can optimize it again. So I'm going to go to the rate of change value, and this time I'm not going to do quite as many. Let's do. See here, once again, we get very stable results looking at the rate of change. In fact, we get an average, a higher MAR ratio. The reason for that, I would expect, is that rate of change will get us in as a different entry point. We can still change the entry level here. And this changes the entry level for both long trades and short trades on an equal amount. RSI, just looking at the chart here, it shows pretty good. It shows a pretty good result. Let's put in a linear trend line here, and we can zoom into that. Now you can see here that the trend line is very smooth. We're getting a good high MAR ratio. And let's have a look at what the optimizer tells us about the RSI strategy. Now we're going to use some different values for the RSI. I'm going to go from an RSI value of 8 to an RSI value of 18. Look at some pretty common values. Testing the RSI, click on optimize. And once again, it's going to run through all the values, this time allowing for long and short trades. One thing I can see pretty consistently is a very high MAR ratio. Decent net profit for all of these as well. So encouraging results for all of the indicators on a range of different values. We're not optimizing to find the best values, we're optimizing to find how this strategy performs with a range of values. So the next thing I'm going to demonstrate is maybe you don't want to use the ATR to calculate your position size. You don't want to adjust for volatility. You want to take these big ups and downs. But you can see here, the big difference here is we're getting a much higher net profit because we're taking larger position sizes, because the model is not adjusting for volatility. Flick on to RSI. I think you're going to see much more volatile results. We can see these results here are performing pretty well, but you will get much more volatile results. And once again, breakout. And see, this is what you may well get if you are trading this type of breakout strategy, a very high spike in your results. So I would say a slightly riskier way to trade. Looking at a different value for breakout, let's put it back to ATR. You see much smoother results adjusting for volatility. I hope you enjoyed this video. If you did, please hit the like button and please subscribe to this channel for more content like this about backtesting trading strategies, about technical indicators and seasonal analysis. And for more information about trading the financial markets, please go to tradinginformed.com.